Joining us for this week's Market Roundtable, Tommy Grisafi and Ray Grabansky. And of course, a lot of uncertainty in the market right now, whether China deal, whether we're going to get that, and African swine fever. Let's talk about China first. We're pretty much certain we're going to get a deal. The terms of the deal are going to be what's important, right, Ray?
I think it's very important, and I think this is the most important of all the issues. It has been the past year. China is a 25 million acre customer, and I think any deal is going to involve more ag imports because they need to balance their trade with us. So that's been the thing that they've offered over and over. These other issues, intellectual property and all that. You know, this was a deal that was promised to be done by March 1st, then by April 1st, and here we are in first week in April, not done yet.
Yeah, keep kicking the can down the road. It's not just about the deal, it's also about enforcement of the deal, right, Tommy?
Well, China's famous for buying a lot of stuff and then watching markets go up and canceling and buying it back when it goes down again. So they're pretty crafty traders, probably the best traders in the world. But to Ray's point, we know they need our stuff, and it's amazing they're getting by without it. They pulled this shot this week where they stopped, or last week, and they stopped buying the canola from Canada. That's interesting, and so it's not only affecting us, it's affecting Canada, it's affecting canola, it's affecting spring wheat, and something needs to come about to resolve it so that we can get on as hedgers and speculators and help people manage risk. So.
And while the market's been getting really tired of the fact that we haven't gotten a deal, soybeans are a good example of a market that, even with the 900 million bushel ending stocks, has not been going down. So the trade obviously is waiting for a deal here, aren't they?
Actually, surprisingly, soybeans made our lows last September, and they have drifted higher since then, surprisingly, whereas corn and wheat have both sunk to new lows at this time. And soybeans is what we sell to China. I want to add one comment about China. That is the biggest monopoly buyer in the world for commodities, and they are a central command communist buyer. They have complete market power over all their purchases.
What about African swine fever, Tommy? That's the other wild card here for China and them wanting to get a deal done because they're going to need our pork and a lot of it.
So I've spent a lot more time watching the hog markets. I don't have many hog customers. We do at the firm, but it's the only market really moving right now. It's fun to watch. It's limit up, it's limit down, but you have to understand what's driving that. And my fear, and I think what growers should be fearful about, is if and when this hits America, and I'm not sure it will, but it's possible it's hit other countries overnight, what it would do to our corn sales, what it would do, we export 30% of our pork to the rest of the world. That would quit immediately. We would stop selling DDGs. I think corn prices could go down dramatically for the short term. So I was trading in the pits when Mad Cow hit, and it was amazing. You know, that was just a small case compared to what this will look like. So corn has a story. We digested these numbers. It was interesting. We had a bad day Friday. We've come back. But when I looked out last night at some of the prices, I think there's some opportunity out forward into the following years. And if we lose any type more demand, it really could be scary. So to me, when I look at a North Dakota farmer, I say, wow, the only thing that we could even break even or make a little profit at right now is corn. And when you look at the soybean futures, real quick, Michelle, the soybean futures look okay, but the local cash market our customers are getting is horrific. So looking at the futures, it's like, 950 futures, that's not the end of the world. Oh, 820 cash, those numbers don't work. It's the cash market. It's our lack of exports to the PNW that's hurting us.
Weather is the other uncertainty, although we don't have much weather premium put in this market right now. When will we?
Monday, we get our first crop progress, and then we get it weekly after that. Right now, it doesn't look like we're going to plant much in North Dakota until maybe May, and we still got a lot of snow out there. So it's a real issue.
That's right, and we haven't put weather premium in. Funds are very short, especially in the corn market. So is weather and a China deal enough together to get a good rally going, Tommy?
One of the things I suggested to my customers was literally 5 weeks ago, nobody in the hog industry could make money, and they were all losing significant money. 5 weeks forward, they're all making huge money for multiple years, and they're having a hard time making margin calls because the market's that intense. So to your point, we can go from things being that bad to that good that quickly, but we would need three things. We'd need a China deal, a weather deal, and these funds then would have to cover. That would be a vicious short covering rally, which may be your opportunity to get sold for this year and a few years forward.
So like we said, lots of uncertainties. So let me ask each of you your marketing advice. What are you doing to help producers manage this risk right now?
At this point, you know, you sometimes being a market analyst, you have to react to what the market can give you. And so we need to see what some of the resolution of some of these issues are before we can really make a realistic assessment now. Okay, we get a little weather rally, these other things happen. What is the maximum upside we think we can see in the summer for our summer rally, and we're going to have to make some sales there.
But you guys have some price targets in, because when it gets volatile, you're not going to have time to think about that. You're going to have those targets in place, aren't you?
I've been doing this for 27 years, and I don't think I've ever seen a year where I've had more uncertainty than we've had this year. And that big monster trade partner out there that we're having a disagreement with is a huge issue. So I think you have to be more flexible this year than we've been in the last 25. And that includes the 08 and 012 rallies.
And Tommy, how are you positioning your clients?
To Ray's point, I've been trading at the Board of Trade for 27 years, and uncertainty to me means opportunity. Now you need to know how to harness that. Hopefully you're working with someone who's a professional, understands this, and when these markets move, it becomes incredible, it's very emotional.
Right.
You're worried about getting the crop in, the market's moving. So the best way to handle it right now, simple, is just a put. I love to have scale up selling in there. Unfortunately for many growers up in this area, they've always wanted to be a scale up seller, maybe not use futures or options. They're going through the whole year and maybe only getting 10, 20% sold, then calling people like us and saying, I have 80% of my crop left, what should I do? So if we don't go up, all we really helped them do was enable them to be a scale-up seller of orders that were never hit. I don't think this year will be that case. I think we'll have opportunities. Almost every year we do.
Appreciate your time, both of you. Thank you.
Thank you.
Ray Grabansky and Tommy Grisafi with this week's Market Roundtable.